Hi there, welcome to Kneppy Invest. Time to talk Fortescue, and this is fortuitous timing because I am recording this video about 4:20 p.m., which is Brisbane time. So the market has been closed for just over 1 hour. Just had a look at Fortescue share price, up over 6% for the day. Had a look at some other iron ore mining companies, and they're up pretty big today as well, including Mount Gibson, up over 11%. So no doubt iron ore prices were higher in the past 24 hours. And that means iron ore prices have made a fairly significant rally over the past few weeks. So pretty good timing doing a Fortescue video today, focusing on their financial year 22 results. First question I want to ask about Fortescue is around the quality of the company. Is this a high quality company or a low quality company? If you know anything about me, you would know that for most, if not all mining companies, I would assign those companies as being low quality simply because they are price takers, and the share price of the company and the valuation of the company is highly dependent on the commodity they are mining. And Fortescue is no different. This is an iron ore miner, and the share price and the valuation of Fortescue will follow iron ore prices pretty closely. There is a pretty strong correlation there. Now, in terms of mining companies, I do think, in my opinion, Fortescue is one of the highest quality mining companies, not only in Australia, but also the world. And the main reason I think this is a high quality mining company is because of Andrew Forrest, as some people might call him, Twiggy. And I just think, I have a lot of time, probably the best way to put it, a lot of time for how he is thinking or leading this company forward. And I think he is moving in the right direction. And the reason he's moving in this direction, I'll talk about this later in the video, is for the benefit, the long-term benefit for Fortescue and its shareholders. Although I am high on Fortescue and Andrew Forrest, I am not a current shareholder of this company. I have been a shareholder of Fortescue in the past, and the main reason I have been a shareholder and no longer am is because, in my opinion, the best time to buy a mining company is when the sentiment in the underlying commodity is at its lowest. And this happened to iron ore in 2016. Iron ore prices fell quite a bit back in 2016. Fortescue share price fell quite a bit. And then as iron ore prices started to recover and Fortescue share price started to recover back in 2000, I think it was 2017 or 18, I took a position. And this position was just taking advantage of this change in sentiment and a shift in the trend in Fortescue share price. And then fortunately in 2018, I think actually when, 2018 or 19, when the Vale mining disaster happened in Brazil, and that's when we really saw iron ore prices take off and Fortescue Metals share price also take off. I could be mistaken, maybe that was 2020. Anyway, back a few years ago, that is when the share price of this company absolutely took off because of, unfortunately, this mining disaster in Brazil. So no longer a shareholder of this company. I took my profits. We have seen the share price of Fortescue swing around quite, I won't say violently, but the share price can be quite volatile because it does follow the iron ore prices. And iron ore prices, to be fair, have been quite volatile over the past few years. Now on to why I have a lot of time for not only Fortescue, but particularly and especially Andrew Forrest. I do believe he's a forward thinker. He's thinking about the long term. He's trying to position Fortescue to take advantage of where the world is heading. I'm seeing BHP do the same thing as well. But I think he is definitely positioning Fortescue down the right path, the absolutely right path. This particular quote was found in their recently released annual report. I won't quote it ad verbatim, but the best way to think about energy, in particular our finite fossil fuels and renewable energies, is this. The more we deplete our fossil fuels, the more expensive energy becomes. The reason behind that is quite simple to try to understand. Over the last 100, 200, 300 years, we have taken those fossil fuels that are easiest to find, the cheapest to extract out of the ground first. And what's left behind are those fossil fuels that are harder to find and will take more time and effort and money to extract out of the ground. And this is going to continue through time. So the more we use fossil fuels, the more expensive it's going to be to take those fossil fuels out of the ground. Hence, the more expensive energy becomes. Now, on the flip side, the more we utilize infinite resources like renewable energies, the better the technology becomes to utilize that renewable technology or renewable resource. And then the better the technology becomes, the more efficient and cheaper energy becomes. So, simple explanation, the more we use fossil fuels, the more expensive it becomes. The more we use renewable energy, the cheaper it becomes. And that's why the world is positioning towards using renewable energy more and more. And another way to think about this, and this is absolutely silly because there are some people who still believe climate change is a hoax, it's not real, it's not happening. It's absolutely happening. All the research, all the science saying it's absolutely happening. But just say you don't believe it for some reason. Even if you don't believe it, the economics say you should still be focusing on renewable energies simply because of the fact that the more we use fossil fuels, the more expensive energy becomes, while on the flip side, the more we use renewable energy, the cheaper energy becomes. So just think of it in those terms if you don't believe in climate change. And if you don't believe in climate change, you have to be listening to other people and stop listening to climate change deniers like Alan Jones, because he's an absolute fool. Now on to a few other things in regards to Fortescue. And Fortescue is an iron ore producer. That's all they're mining right now is iron ore. They are trying to diversify. I might talk about that during the rest of their video. And all their iron deposits right now that they are mining are in the Pilbara region of Western Australia. We're talking about the Western Hub, which is Eliwana, the Solomon Hub, the Chichester Hub, which includes Christmas Creek, Cloudbreak, and they're also developing Iron Bridge just near Marble Bar, or just west of Marble Bar. Funny enough, I know a lot of these locations, Eliwana, Iron Bridge, Christmas Creek, and even the Solomon Hub. And the reason I know about those locations are because the airports at all these individual mines, and that's sort of the day job or day work I actually do. In fact, I am recording this video on my lunch break. I got called in to do an ED, and some of the airports I might be forecasting for include these particular mining sites. So yes, Fortescue is an iron ore producer, but they are diversifying. Even though most of their revenue, if not all their revenue, is derived through the selling of iron ore to China, they are trying to diversify. They have exploration sites around the world that are not iron ore projects. They've also created Fortescue Future Industries, and they are spending a lot of money trying to move this forward. So this is all about green hydrogen, green ammonia, that sort of thing. And they have two clear objectives when it comes to Fortescue Future Industries. The first one is to provide the technology and the innovation to eliminate Fortescue's emissions wherever possible. And the second objective is to make green hydrogen at quantity and at speed and fulfill their obligations to their customers. So they are spending a lot of money. On the right-hand side here is their funding allocation for Fortescue Future Industries. And they did spend something like $450 million on capital expenditure in the most recent year. Now, they take 10% of the profit after tax from Fortescue, and that was $278 million a year. So right now, they have set aside $728 million available in funding for Fortescue Future Industries. And I do know some investors who have bought into Fortescue simply because of the potential of Fortescue Future Industries. So you can't just ignore this part of the business because it is real and there is a lot of potential behind this particular thing that Andrew Forrest and the management have created over the past few years. Onto the long-term chart for Fortescue. This is going back to June 2011, so 11 and a bit years of chart. And from June 2011 all the way through to about 2019, share price did absolutely nothing, although it can be a little bit deceiving here because the share price was trading in a range between about $7 and around about $1.50. The low in the share price for Fortescue was about $1.50 back in 2016, and that was a low in iron ore prices. I think iron ore prices fell down to something like $30 or $40 at that point in time. Then it recovered, but then during 2017 to 2018, share price of Fortescue pulled back all the way down to about $3.50, and then the share price broke out at the start of 2019. So that must have been around the time of the Vale disaster, start of 2019, because this was the start of an amazing time for not only Fortescue, but also their shareholders, with the share price increasing from $4 to a high of $26 back towards the middle of 2021. Now, the share price of Fortescue has been quite volatile since that high back in 2021 because of the iron ore prices. We have seen wild iron ore price swings over the past 2 years, and we're seeing it right now over the past week and a bit. Now to the financial year 22 results for Fortescue. And to be fair with you, and to be fair with Fortescue, and to be fair with all mining companies, I don't tend to look at their financial results because it's looking backwards. And I think it's more important with mining companies to look at the underlying commodity, where you think the underlying commodity price is going to go in the future, and then look forward. With mining companies, these results are all about the past. You could say that for most companies, but with a lot of companies, you can see how the company is performing because most companies aren't cyclical, most companies aren't price takers of a commodity. So for Fortescue, at a share price of $19.96, and this was the share price before trading day, so that share price at the end of trading on today, the 5th of December, is noticeably higher than 1996. But at 1996, the market cap of Fortescue was $61.5 billion. They generated $24.6 billion in revenue, $8.7 billion in profit. So this company is highly profitable in the last financial year, which is a little bit lower than the previous financial year because iron ore prices were higher in financial year 21, $9.4 billion of operating cash flow and $5.5 billion of free cash flow. So this company is generating a lot of cash, and this really has improved over the past about 4 or 5 years. This company has brought their debt down. Well, actually, they did bring their debt down, but they've gone more into debt during the last financial year. But that's the main thing about this company. They are producing because they're selling their iron ore. Probably, is it a higher grade iron ore? I think it was a low grade iron ore. Now it's a high grade iron ore at pretty good margins, really good margins for an iron ore company, fairly similar to BHP and Rio Tinto. So even if iron ore prices do go down a fair bit, this company will still be profitable. Now to the revenue growth for Fortescue. You could argue with me, if you look at the revenue chart over the past 11 years here, you could say that this is a high quality company because what I want to see is an upward trend in revenue. And for Fortescue, you definitely see that. However, you can see the cycles just in this revenue chart because between 2014 and 2016, revenue dropped from 11.8 billion to 7.1 billion. And then when iron ore prices hit their record high back in 2021, that's the year where Fortescue produced $22.3 billion of revenue, significantly higher than the most recent year where they only had $17.4 billion. The other thing here is you can see operating margins have increased quite well over the past 5 to 6 years. Going from 11.3% in 2015 to 67.7% in 2021. And one of the good things about Fortescue, BHP, and Rio Tinto is their margins. The amount of money they have to spend to take the iron ore out of the ground is not that much. So they can survive even if iron ore prices fall a lot. A lot of the other junior iron ore producers can't do that because for them to extract the iron ore out of the ground, they have to spend a lot more money than Fortescue, Rio Tinto, and BHP. If you just calculate the revenue per share growth over the past 10 years, we get 12.8%. Over the last 5 years, 25%. And over the last 3 years, 19.9%. Those are solid numbers you might find for a high quality growing company. So you could argue with me, maybe unsuccessfully, maybe successfully, that this is a high quality company just based off this revenue chart. One thing I look at for most capital intensive companies is just how much capital expenditure they spend in each given year over the past 10, 11 years, and how much money they are deriving through their operating activities. So this is the capital expenditure and cash flows from operations over the past 11 years. If we go back to 2012 and 2013, Fortescue spent over $6 billion in capital expenditure and only received about $2.8 to $3 billion in cash flow from operations. So this company was actually bleeding cash back in 2012, 2013. There was a point in time, not sure how far back, there were questions about the long-term viability of Fortescue. But things really turned around. Fortescue really cut back on the capital expenditure, particularly during the period between 2015 and 2018 when iron ore prices did fall. They only spent $360 million in capital expenditure in 2016 and received $2.4 billion in cash flow from operations. And then as cash flow from operations started to increase, as iron ore prices started to increase, we saw Fortescue starting to spend more money in capital expenditure. And that is exactly the way management have to do things. As they have to take advantage of higher iron ore prices, spend a little bit more money in capital expenditure. These capital expenditures could be for maintenance. It also could be for growth reasons. Now, I want to point out one thing looking at the statement of cash flows, and that is around the amount of money this company gave back to their shareholders in terms of dividends. Now, in financial year 21, this company produced $12.6 billion in operating cash flow and gave back to their shareholders $5.7 billion in the way of dividends. And the reason why this company had operating cash flows of $12.6 billion was because of iron ore prices. Then iron ore prices fell, and Fortescue only produced $6.65 billion in operating cash flow. Yet, they gave back $6.7 billion back to their shareholders in the way of dividends. So no doubt, with lower iron ore prices, this company's operating cash flow will be possibly lower than $6.6 billion. But one thing that will definitely be lower is the dividends they will give back to their shareholders. So if you're only buying Fortescue because of the dividend yield from 2022, and if you think those dividends will be sustainable, I think you will have some pain to experience in the next year, particularly when this company announces the dividend they will give back to the shareholders. One thing I look at for all companies is just the amount of debt the company has and whether the company is either net debt or net cash. And this was found either in the notes of the financial statement, I think it was found in that, or maybe the presentation of their financial results. Now, in financial year 21, this company was in net cash. They had net cash of over $2.7 billion. Now, at the end of financial year 22, they have borrowings of $5.35 billion. They have lease liabilities of $755 million. I would argue that lease liabilities, in my opinion, don't really belong in borrowings or debt. So if I just take that out, that means they have borrowings of only $5.3 billion. They have cash of $5.2 billion. So they are net debt of about $100 million. So they've gone from net cash by over $2 billion to being net debt. That's not a bad thing at all, particularly for this company that is producing a lot of cash flow in their operations. One thing I always look at is capital expenditure, particularly if a company is capital intensive, and that means they spend a lot of money on capital expenditure. One thing I like all companies to do is break down the capital expenditure into maintenance and also growth. A lot of companies don't do that. And an assumption I have heard is if a company doesn't provide that information, just assume 50% of the capital expenditure is for maintenance, 50% is for growth. But Fortescue has broken it down somewhat in their financial year 22 capital expenditure, and then also their expected financial year 23 capital expenditure. In financial year 22, $1.4 billion spent on sustaining and development capital, $994 million on exploration and studies, $1.1 billion on major projects, and $210 million on the acquisition of Williams Advanced Engineering. This excludes the FFI capital of $130 million. Now, the expected capital expenditure in financial year 23 includes between $1.4 and $1.6 billion on sustaining and development capital. So I'm just assuming that is maintenance, $200 million on exploration and studies, $700 to $800 million on major projects, $300 million on hub development, and also between $100 and $200 million on decarbonisation. They also expect about $100 million in FFI capital expenditure. Now to the valuation metrics for Fortescue, and if I thought this was a high quality company, I would be completely dazzled by these numbers. This would be like one of the cheapest companies in history. So the PE ratio for Fortescue at a share price of $19.96 was 7.1. That is really low for a company that is generating lots of money in their operations, and also free cash flow as well. Price to sales ratio 2.5. I don't really look at price to sales ratio all that much for a lot of companies, definitely not for Fortescue, but the EV to free cash flow is something I would look at. So enterprise value is just the markup of the company, and then you take away or add back the debt or cash they have on. So this company doesn't have a lot of debt. In fact, their net debt by $100 million or $700 million, depending what way you look at. But free cash flow was about, what was it, $3 billion. So that means the enterprise value to free cash flow is 11.4, a little bit higher than the PE ratio, but not too high. I have seen higher than that in some mining companies. Also did a reverse DCF just to see how this company would have to grow, how strong this company will have to grow to justify the current valuation. Now, it will only have to grow at 3.5% per year over the next 10 years to justify a share price of 19.96. And that's not too much growth to justify these current valuations. So I think this company can actually do that. So I think at these prices, there could be some value. So even though I don't really talk about a mining company in terms of value, for Fortescue, I think there might be some value at a share price around about $20. I've already mentioned that Fortescue is trying to diversify. They have their Fortescue Future Industries, but they're also doing more exploration, not only in Pilbara and Australia, but also internationally. There wasn't as much information on these exploration deeds the company is doing right now in their annual report, even their website. I would like a little bit more information on these exploration sites or projects. So in the Pilbara, it's all about iron ore. In Australia, they do have target generation for copper gold in WA, New South Wales, and South Australia. Internationally, they have drilling programs in Argentina, Kazakhstan, exploration in Peru, Chile, Brazil, Ecuador, and the Republic of Gabon. So this company has a lot going on. And that's one of the reasons I would like a little bit more information on all these exploration projects the company has going on right now. Now to some charts. The first chart here is iron ore. This is not Fortescue, but iron ore prices and Fortescue share price are highly correlated. And I've already mentioned that iron ore prices have been quite volatile over the past year and a bit. I think I've said 2 years. And this chart goes back to August 2021, when the price of iron ore was falling quite rapidly. It fell all the way down to about $90 in November last year. And then we saw a nice rise in iron ore from about $90 all the way back up to $165. And then iron ore prices fell again from $165 all the way down to a low of 75. That horizontal dashed line that my head is just over is a fairly strong support level for iron ore. And for a brief period of time, like the start of November or the end of October, iron ore prices fell below that support level for only about 2.5 days. And we'll probably call that a false break from that support level. So some people might have traded, might have sold that iron ore based off that break, but it didn't last very long. And once that false break was confirmed, we have just seen iron ore prices go on a really good rally from about $80 or just above $80 all the way to a current price of about $108. And the iron ore prices have really taken off over the past few trading days or past few days, increasing from about $93 to $108. So no doubt, without even looking at the news, this has something to do with China. And this is the Fortescue daily chart going all the way back to June, and this mirrors iron ore prices pretty well. And we have seen share price of Fortescue rally from $14.50 to a current share price around about $21. So the share price has increased by about 50% in a short period of time, mirroring the increase in iron ore. So if you don't believe that iron ore prices and Fortescue share price are not perfectly correlated, but highly correlated, this should be the proof for you, hopefully. I plan to continue doing these financial year 22 result video. The next company I'll be looking at is Wesfarmers, and then I'll have a look at Laser Bond, Brambles, Phoenix, which is another iron ore producer, but a junior iron ore producer, and 9, Entertainment. If you do have a suggestion of a company you'd like me to do a video on, preferably a company that is profitable in their financial year 22, doesn't really have to be, but at least I want some revenue, a high amount of revenue, because I don't want to do concept or story companies. So leave that suggestion in the comment section of this video. That's it today for my look at Fortescue and focusing on their financial year 22 results. I have 1 minute to complete this video because I actually am doing this video on my lunch break. I was called in to do an emergency duty. And when I say called in, I'm saying I'm doing this shift working from home. I have 1 minute to complete this video before I should go back on shift. So if you have any thoughts, if you think I am completely mistaken about Fortescue, about Andrew Forrest, if you think he's a horrible person, I'd love to hear why you are thinking differently. So leave your thoughts in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.